Hey guys, I hope you guys are all doing well. So what happened in the weekend is that I was looking at DTFX, I was looking at stock trader, I was looking at anyone who, pack trades, I was looking at anyone who trades DTFX, using the zone from the previous history instead of using the ICT. A lot of people have changed from ICT to DTFX, and I'm not either one of them originally anyway, because I learned from Zeirfx. We look at breaker structure in our own Zeirfx way. We look at all block, we look at mitigations, we look at the rules, fixed rules. And from the background of doing Zeirfx backtest strategy in the past was that I was looking at 15 seconds as a trade setup and then 1 second to enter and all the other stuff. But I didn't understand how the market worked. So last year in January, I was struggling with the win rate because last year January screwed me up a bit. So then I started looking at ICT, the PD race in April. I was looking at ICT concepts, I was looking at ICT Dragon, I was looking at Phantom, a little bit on Phantom only about liquidity, and I was looking at TT trades, and I was looking at Ariel. I think the most important influence to my trading career is still Zeirfx. Second of all will be Ariel, with his fearful gaps understanding. I mean, he's a really good educator, as in the contents provided, especially with the free ebooks he gives out. I suggest you guys to check him out as well. The free ebooks, even my friend says, "Oh, this is so convenient." Yes, it is. So getting back to the point, I looked at those videos and I didn't understand how to draw the original move, and then I kind of roughly know how to draw the support demand flip, because that's just the last down move before a breaker structure. And of course will be a breaker structure in the DTFX kind. So because I didn't know how to do that, but I remembered one thing that my other friend said about the importance of the DTFX 50%. What that area essentially is simply the average price of all block mitigation. Sorry, not all block mitigation. We're not talking about all blocks anymore. We are talking about mitigations. That means orders are collected. So it doesn't necessarily have to be an all block. It is the demand and supply zone. And so I went back to my notes and just look at how I developed the strategy. I looked at what I have excluded, what I have included, and I just tried to figure out how I'm going to increase the win rate. The whole thing is about win rate, because I realized I do not want to give up a high RR to do DTFX. I mean, DTFX can have high RR as well, but I don't know if I don't know if I can tolerate a 1 RR constantly. And I don't know whether I have the speed to do the counter trends and pro trends as quick as he does. So I decided to just look at the 50% as well, that I gave up initially in my strategy. The reason I gave up on using my own 50% was simply because I didn't have the time to do the refinements. I didn't have the time to mark my setup criteria. I didn't have the time to even enter 1 second time frame. So this is why I gave up. But what I didn't do correctly is that when I found it, I should have worked harder to just figure out what the heck this is about. I mean, because price is fractal, the strategy will be fractal on a higher time frame as well. And I noticed that when I was entering my strategy without using the other 50% concept, was that I can't enter my trades on 5 minutes, 15 minutes, and even like high time frames. The setups, they don't. I mean, some of them work, but the win rate isn't correct. Isn't as high as my scalp trades. And with my scalp trades, sometimes because not marking where your 50%, where price can do a liquidity grab, etc., I can get stopped out and I can impose to revenge trade and do that other stuff. So then, and also the patience. Like when I finally went back to my notes and marked down the 50%, I have more patience because I know price is likely to retrace to this area, and I'm not constantly, but I'm marking the 50% when price is going down, I'm marking 50% when price is going up, and even over history to see what has been mitigated and what has not been mitigated in terms of supply and demand. And I'm going to say I have put in the effort to apply that, and then to look at where I mark 50% to and from by looking on 5 minutes, 15 minutes, and 4 hour, and pretty much all that. Sorry. Now for all these times that I put in, whether I'm happy or not, I don't really know yet. Because I actually put this on paper trading and align it with 5 minutes. Because applying supply and demand, you always want to follow a higher time frame. So when price prints out the setup on 5 minutes, I should have aligned it as well, which I didn't. It's not saying that I don't have time. I had the time. I just didn't do it because I was so focused on 1 minute. And the snap PY, all these stuffs about the snap PYs, they still apply. But then when I actually mark the setup, per time frame I'm looking at, the acknowledgement, these PYs that were used to be snaps, or still identified as snaps, are still applicable because they're still all locked. It's just that where it anchored from was an area that's already been mitigated. So then that means that the area that mitigate the last zone becomes the last invalidation point. So a price purger will be liquidity grab. I noticed that with my system, with implementing 50%, this is why I say DTFX 50% is quite important. I may still use DTFX 15-minute zone to implement the confluence, but I'm not going to trade the way he does, simply because I don't need to. I already looked at the probability of my trades. Instead of after I implement the old concept, the only decision I'm making now is that enter still on 1 second and 5 seconds, or should I mark just the 15 seconds and 5 seconds refinement and just do a limit order, or should I still do everything in one go? And today I missed one trade. I missed that initial trade was simply because I started the chart late. I was still marking my high time frame zones on monthly, weekly, 4 hour, 1 hour, and 50 minutes. I marked everything. I was marking about where price is likely to hit and just close trade off there instead of being too greedy, target all the way to the high, etc. If I don't implement the 50%, I will feel like I'm a bit stressed, but on the edge, because my strategy is tested that I can get 10 pips very easily based on the strategy itself. But only after when I implement the 50%, marking where price is coming to in terms of mitigation to the supply and demand, then I realized we can be much more at ease. Because the supply and demand is not SMC. I have found my supply and demand within the system I trade. Yeah, so as soon as I finished my trade, it's like 8:17 in UK time, I went on to making a video on my performance and how I marked my strategy to a friend of mine. And I want to share with him because he trades the same similar concept as me, but he looks at how price reacted off that favorable gap along high time frame, and I look at how I use gaps as well. I essentially use gaps to try to find a pivot point of where price is going to pump to continue price or to reverse. And just like that, I usually trade on 1 minute, and as you guys know, you guys see my trade is always at that particular pivot point where there may be a structural disruption, or where there may be a just a high or low, reversal kind of trade. Sometimes I don't have that trade opportunity, and to be honest, with my zones, I don't think I'll miss them anymore. But as I said, my stop loss won't always be 1.3. My stop loss could be, depending on time frame, 1 minute. I saw the 1 minute time frame. It could be as big as 4 pips, which I don't like, but the win rate is higher. And of course, I don't actually have to have 4 pips because I still do the same thing. I just look at the POI. If the POI isn't fair, or if the setup POI is already self-mitigated, as in snapped, then I don't have to look for a trade. And then I can line it with 5 minutes in it. So this is just going to be a video on its own. And the last thing I want to add is that I don't know my audience. I don't know how you guys all trade. I would love to know how you guys all trade, because then instead of just you guys watching my videos, you guys can show me what you guys do, as in if any way I can help, I would love to help. But the point of me making this video was that I want to encourage you guys to look at supply and demand, because it's truly amazing. DTFX supply and demand is just one way of looking at where a lot of people found success. Like I say, trading view indicator, there's a DTFX algo zone, 10,000 people uses the indicator. Of course, there would be a lot of uncovered 10,000 or 20,000 people who uses the similar concept that he trades. But if there's 10,000 people using his indicator, there's some goodness to it. But nevertheless, I'm just here to say, okay, DTFX zone is good, but you don't necessarily have to use his concept to trade supply and demand. Find something that works for you, and we just go from there. And right in a minute, we're gonna go to the chart review for the day. I'll see you guys in the next video.